get rolling. Good morning. Happy August, everyone, and happy back to school. Hopefully, everyone is having a great time getting back into the rhythm of everything. So we've got some interesting stuff for you today. First, we're going to start with our traditional congratulations, celebrations, and shout-outs. We'll recap some of the best practices from our transportation reimbursements that Zane did for us last month. We'll look at what's on your radar and take a quick peek at the data acquisition calendar before jumping into some housekeeping items, then followed by some hot topics. And then Austin will be taking over the reins for some professional development in 30, specifically over the GRA and how we're doing carryover. So first, some celebrations and shout-outs. New within the department, Maria Puga was appointed as the title director. We're very excited for that. She's got a lot of knowledge, and she's also simultaneously doing her previous role as well as an EL coordinator. So she's got a lot on her plate right now, but is very much doing well, settling in. Another great one that's happened since our last meeting is that we finally received all of our grants from the U.S. Department of Education. And last one that I wanted to mention on this shout out is we got the first round of the school district's facilities cooperative fund projects, which is $33 million that were awarded to 5 districts throughout the state to fix some safety issues. So congrats to those districts. Next, I'm going to go ahead and quickly recap the best practices for the transportation reimbursement. Again, these are the previous webinars saved on our website. So if you want to look in more depth at some of the screenshots Zane had, you can do that. But quickly, one of the big things that we see is issues within those reimbursements is that there's no supporting documentation. And we really need to have that supporting documentation. Another common problem is that the mileage summary either has more miles than your odometer report, which means how did you manage to get those extra miles if the bus didn't go there, or the mileage summary hasn't been started. So those are some pretty common issues on the mileage side. Another thing we see with the documents is a lot of times there are highlights, handwritten scratches, totals, and handwriting, and that makes it very hard for us to audit that. We are nerds. We love Excel. Please send us your Excel data. Another item similarly is that the detailed ledger may not have much detail. We can't tell if that's a 50 or an 80% reimbursement, and that makes it difficult for Zane to be able to carry out his work. And there's another item is that some of those pre-approvals are necessary for things like your routing software, cameras, big purchases, and some of your contracts. And if you're not certain if you have something that needs a pre-approval from the department, please reach out to Zane or Allie, and they'll be able to get you squared away. And then new items that you'll be able to look forward to next year, well, and partially this year as well, the authorized vehicles. Now, while in this current fiscal year, authorized vehicles are allowable, those reimbursements won't hit until next year since we're always a year in arrears when it comes to those transportation reimbursements. So you won't actually see those funds come to you until next year if you're doing those alternative authorized vehicles currently. And the reimbursement is set at 91 cents per mile as a flat rate. That will adjust as we need to with inflation. And again, those vehicles still have to be inspected. You still have to have properly licensed drivers that have also gone through the Department of Transportation training. And lastly, a big fun thing, finally got rid of that $7.5 million discretionary adjustment that came out during the Great Recession. So we finally kicked that out. And again, that $7.5 million reimbursement will go back out to LEAs for costs incurred this year in the following year, again, because we are in arrears. If there's any questions on that, go ahead and pipe on up, folks. So there's something in the chat, and we'll try to get some answers for you. But again, that work that Zane did is on the website if you do have questions on transportation. So what's on your radar? So a quick note, our data acquisition calendar, this is going to look different than what you're seeing on our website. We still have not gotten the website officially updated and through the processes with IT yet. So this is kind of our shot at trying to give you a more up-to-date version of that. There will be some adjustments as well going forward, but this is a pretty good spot at it. So starting in the 1st of September, you've got some special education reports coming in on the 1st and the 3rd. And these are applying to both districts and charters for some of your coordinated early intervening services and then your timeline compliance notifications. Also, and this will be another note we'll probably hammer a little bit later, is the IC data submission. So for your summer alternative work for 2025, that one's due on the 6th of September. And then we start getting into some of our title things. So we've got Title 1C on September 15th, and then also September 30th for Title 1A performance report. And in between those two is our school district facilities fund report. Those go to Julie Overly in the public school finance side. And then lastly, at the bottom, another Title I that I missed earlier, the Title 1D neglected and delinquent programs evaluation. So got a lot of things coming up for you all. And again, we are working very hard to update what's on the website. This is probably a better look than what you're going to find on the website, although most of the dates are similar. So a lot's going on in September. Get ready for that to come on through, folks. Now we're going to do some housekeeping. So the first thing I want to talk about with you all is some upcoming grant opportunities. So again, that public school facilities cooperative funding program, this is only allowable for districts, and specifically it has to be districts that either have failed bonds in the last 2 years or their current bonds and levies are not suitable to fix safety issues that are currently documented within the district. And so that application period ends on October 7th. There's still a little under $20 million left in that fund. So we're hoping to get some good applications through that as well. The State Board of Education, so this is not a department function, but with the State Board, they have a rural and underserved education incentive program that goes directly to teachers. And then lastly, I want to give a shout out to our colleagues over at the Department of Environmental Quality. They've got a $4 million grant cycle going right now for vehicle replacement through the Diesel Emission Reductions Act. And that one goes through September 22nd. So a couple items that might be helpful for you all as you're looking at trying to get some additional funds coming to you. Now I'm going to go ahead and hand this on over to Lisa and see if she can help walk us through some of the items that are coming up as far as some training.
Hi, good morning, everybody. As far as for special ed goes, there's quite a few trainings coming up, and I know we have some business folks on that I just want to make you guys aware of some things you might be coming through for folks using their P cards and registering for some of these different pieces. Some of these are regional, like our essential components trainings around the state. This year, something really exciting. It's a tri-state collaborative, the Northwest Early Learning and Pyramid Summit, and we're hosting. And so we hope to have as many of our folks go to that as possible. There's some opportunities for some help with registration and whatnot for that. So reach out to Shannon Dunstan on those. A lot of this is going to be covered on our special education directors webinar, but for the business folks, just so that you know, these are specific to special ed. And then the Pathways to Partnership is done every fall, and that one's here in the Valley here in Boise. So just be aware of those coming up. And I think I'm ready for my next slide. Can I move it? There we go. On the IDEA grants, remember I gave you guys about 30% upfront. We only get about that upfront. We don't get the rest at the state here until October. So just remember, you're getting a lot more in that timeline. But we have to revise the calculations slightly for everyone's allocations due to our new charters opening. So you'll see you've got your partial award now. The rest will be coming later. Just remember, it's to help you get through that first quarter until we get the rest of the funding out to you. Go ahead with the next slide. And then for the partial grants, I get questions on this. They're tied to the application, yes. You can see your full tentative preliminary allocation in there, and you did already submit your preliminary grant application in June. That was to say, yes, I want the money. Here's my preliminary budget, but you'll be revising the budget sections when you're doing your compliance reporting, which is what you told me you did for last year's spending. That's a requirement for maintenance of effort that I have to do in order to approve you for the rest of the grant. So if you have questions on that, let us know. I've got our email here at the bottom. And we know that you guys are all working on audits on different timelines, but we really want your final numbers in there because it actually helps calculate your carryover. And Austin will be talking to you about that here in a few minutes. Next slide. And then on that final application, there are some new sections. So just reminding you guys that there's some, if you have private schools, it looks a little bit different. So let me know if you have questions on that. And then there's some opt-out for folks that didn't want FAPE. And we tried to help you with the Medicaid match validation so that you can't actually forget it. You have to say one way or the other whether or not you have it. Next slide. And on the mini grants, we have special ed mini grants almost every fall. We are wrapping up our specific learning disability grants. All the work had to have happened by last June 30th. So if you have final reimbursements you need to claim, please do. We'll be liquidating those pretty soon. And then we simultaneously gave out evaluation materials mini grants, and that's to help you guys offset those more spendy purchases for some of those evaluation materials. But remember, you guys had very specific lists of things you wanted approved, and we're supposed to be checking against those when you put in for your reimbursement. So if something's changed, please let us know so that we can make an adjustment to that and make sure that you can use all of those dollars. And then coming soon, you'll be seeing some of you potentially will get an early childhood pyramid collaborative summit type of professional development support money, also in the form of a mini grant in the GRA. And that's it for special ed.
Thanks,
Oh,
Lisa. Just a quick note, please update your IC contacts. Now, this is really helpful for us as a department because we don't know who's coming in and out of your roles, and this is one of our best ways to track who's your title director, who's your sped director, who's your business manager. So, as much as possible, we try to keep these up to date because as we're mailing out information to you about potential impacts to your budgets, these are the listservs that we're using. So, these are pretty helpful for us as far as contacts. So, put in a plug in to please adjust those if they need to be. All right, next we're going to be going into some federal updates. So I'm going to hand this one off over to Austin. Go ahead, Austin, you have control.
There we go. Couldn't unmute now that I had remote control. So just kind of expounding upon that IDCI contacts spiel real quick. I'm going to skip ahead one slide and break the rules already. If I can go backwards in the slide deck, maybe. There we go. The mini grant recipients that recently got funding. Thank you guys for responding so quickly. That was a really short turnaround on us getting money out to you and us letting you know what the requirements were. You guys got back to us very quickly. Super competitive for the Empowering Educators Grant. School Improvement Grant also had a lot of interest. If in these circumstances where we're doing mini grants, if we don't have IDCI contact information that's up to date, we can't let you know that we're trying to give you money. So it's a great little incentive when we're doing these mini grant programs through special ed or through ESEA especially. You guys want to know when there's extra money available. So thank you again to those folks that applied. And we're happy to announce that we've managed to get out extra funding for 1C programs, 2A programs, 3A, and school improvement programs. Kind of in light of the current circumstances, we figure, now above all other times, this is a great time to get extra funding into those districts that really need the extra help. Also going to go back one more slide real quick. As Rob mentioned earlier, all allocations are in the CFSGA right now. Those are solid numbers up until we get into those November revisions along the same timelines as Lisa's final application. We're going to be revising your allocations slightly one more time just to accommodate those new and expanding charters. Shouldn't be any drastic swings up or down unless you've declined funding since then, but for the most part, everybody's funding is going to hold pretty much steady. And the reviews have begun in our team and approvals are flowing. We've got folks with money in the GRA already. And the sooner you get your application to us and revised, the sooner we can get that money back out to you. So once again, thank you guys for your patience and all the hard work you've been putting in to get these applications together, especially given some shifts in the application requirements. So I'm going to pass it back to Rob for a moment and we'll be good.
Thanks, there, partner. So yeah, I've got a couple state updates. Try not to do a whole lot of doom and gloom in these, but I do want to make you aware of some of the state general fund challenges. So wanted to first touch on where we ended fiscal year 25. So our sales tax came in about 110 almost less than the forecast, but overall it only missed by 128 million on over $5 billion, $5.5 billion. So for all intents and purposes, FY25 was ended very well. The legislature set aside some additional savings. They were fine there. The sad part and the unfortunate part comes in for this next fiscal year, or current fiscal year rather. For 26, the legislature estimated $5.9 billion would be the revenue fund that we'd be collecting as a state. Now, with looking at the last few months of projections, the actuals that came in both June and July, we're looking down $400 million. So overall, our forecasts as a state are showing that the general fund will be in a deficit for fiscal year 26. So what does that mean to you all? The governor officially ordered a 3% general fund holdback from each department for fiscal year 26, which we have to get processed by September 15th. Now, the shining light here for you all is that your direct budgets are being held harmless for this. So all public schools budgets are not being hit with this 3% general fund holdback at this time. So that is good news for you all, but that does mean that we here at the department are going to see some of those holdbacks, and we're trying to find a way to do those while still being able to provide you all those services that you expected from us. So we may see some services drop, but we are trying very hard not to cut staff and also to make sure that the services you're requiring and you need from us are going to be able to continue into the future. On the other hand, now the legislature has officially asked for those 2, 4, and 6% holdback plans that were supposed to be just plans. Now they want those documented. So we're working on trying to figure out what does that look like and how can we, again, look at those holdbacks while minimizing the impact to you all out in the field. On the plus side, our budget is due next Thursday, and so we're working diligently to get that budget in. And we do have some items that we're looking at adjusting for public schools, such as some additional funding for special education, and also some flexibility to maximize the amount of money that's already out there and reducing some of the caveats for some of these different funding pools. So we'll have more details on what our request was, what the amounts were in our next meeting next month, and we'll be excited to share those with you. So again, not great some on the news in terms of general fund receipts coming in and what the forecast is looking like, but we are still working diligently to try to increase the amount or make more easily accessible to you all the funding that's already within the appropriation. So now I'm going to hand it back to Austin again, and we can go through his professional development in 30. Go ahead, Austin.
All right. If I got remote control again?
No, now you do. Sorry.
Beautiful. Alrighty, the most white knuckle fun, exciting part of the morning, review training on what my carryover is, how the GRA works. We tried to, kick off Thursday in the most white knuckle fun way we possibly could. So, first and foremost, we're going to work on orientating around what the tools are that are available to you within the GRA itself. Because sometimes you don't want to really dig into those extra menus, but I promise some of them are remotely helpful. So when you're on that GRA homepage, you're going to navigate over to that reports tab next to the grants tab. The grants tab is the one you're using when you're making all of your claims across all of your different federal funds. If you're a business manager and you're in this menu constantly, this shouldn't be too shocking just yet. When you open up each of these reports, they'll open up into a new window and give you some menus to choose some different options. So we're going to roll through what each of those look like. First and foremost, we have the paid requests report. This is going to be a summary of all of the federal grant payments you received for the time window you have outlined. For the sake of this example, I have chosen 7/1 to 6/30 just for argument's sake. But bear in mind that those dates are sorting based on the day of payment out of the GRA, not the expense dates. So if a payment showing in this screen, like that very, very first one, request number 114999, that payment date might be 7/1, but the expenses were most likely from June. So if you're looking for a certain fiscal year's drawdowns, this isn't exactly a clean look. But you can do a broad, like 16-month overview and isolate which of these payments came in during a certain fiscal year and reconcile it to your revenue receipts. This screen is also much deeper than I was able to capture in a screen grab. You're able to look at all of your grants for the given year. So you should be able to find everything that was sent out in your own books for a given year. You've also got the option there. There's that little save icon, that little floppy disk with the arrow. That's a button you can use to export into Excel if you would like. I prefer Excel over an HTML view, less navigation. I can do more data analysis. So if you're more into that sort of data analysis, I highly recommend you export it out and manipulate it there. Moving forward, this will be your allocation summary. If you're curious what you received in a previous year or what you currently have active, this will be a good tool for you. You can pull this up and see what your current year allocation was for each of the federal grants you were given. You're also able to see a current summary of what the balance is of each individual grant and each individual year. So a quick caveat again is that that balance summary on the far right does not account for any pending drawdown payments. So if you have a submitted drawdown request, but it hasn't been approved and paid, or even if it has been approved but hasn't been paid yet, it has not been deducted from that balance yet. So you may still have to go into another menu to see if you have anything pending. If you know you don't, this is a nice clean summary to see what's been untouched in the GRA still. You also have a nice a view of when these funds are expiring by, as well as what the the FANE is if you're looking at your CFA or referencing your GANs, that sort of thing. You got your grant activity report, which shows where your drawdowns are coming out of each individual year of funding. You can see in those top two that the latest drawdown given in February 11th, in February of this last year for that $7,600, that came completely out of 23-24 funding. But the drawdown that took place on the same day that request number 120125 was split across 2 fiscal years. You can see in that period line, there's 2023-2025 and 2024-2026. So this drawdown actually had to come out of 2 years of grant funding because it bridged that gap and moved into the new year's grant. So you can track what your carryover balance is doing there. You can also see what your spending is over time. The screen's also nice if your drawdowns are kind of clean and you don't have any certified staff you're supporting with an individual federal grant, and you want to see what your carryover is retroactively. I can assume that this recipient, given that they're only getting like $125,000 of title, they may not be funding a certified staff member with this grant. So with their 2 July drawdowns at the very bottom there for $7,100 and $9,800, probably for June expenses, and then a small chunk of July expenses for maybe the tail end of summer school or some late year training, and then no drawdowns again until late November. I can assume that they paused drawdowns because they were, they were all caught up. So if I manipulate this report and say I want an end date on 7/15 after that second closeout drawdown, it'll spit out at the very top where it says ending balance, it'll spit out their carryover. So if your drawdowns are clean and they're simple, that's a nice, easy way just to pull it up. Not all of us are that lucky. We have drawdowns against multiple fiscal years going at once, and we can't do that as easily, but it is a tool worth knowing about. And then finally, this is probably the most useful and like the Bible when it comes to the GRA reports. This will be your detail report. You pick a grant, you pick a start date and end date based on the date it's paid out to you, and you've got a nice clean record of what the category splits were for each and every single one of your drawdowns. You can see how much was against salaries, how much was against benefits. You can see the notes that you or your predecessor put into the GRA for what was being drawn down. You can see what Michelle has said back to you about what may need to be corrected or what needs to be clarified. You can inform your future drawdowns to make it a little more bulletproof. The only piece of information that's missing out of this report is the backup documentation you may have uploaded. And well, I say may, it's a requirement these days, but in a few years back it wasn't. If you want to get a hold of your backup documentation, you take that request number, it's in the far left column, and you drop it into the search bar on the main screen of the GRA itself. When you search that up, it'll pull down a complete record of the GRA request, including the attached backup documentation. So it is available to you to review down the line. Once it disappears out of the GRA's paid requests history, you still have access to everything you submitted. So, okay. Now that we know what we're working with, please remind ourselves of the goal. So we're in August. We're in that time of year where we're trying to sort out how much of our federal grant funding and how much of our funding we're able to carry forward into the new year. And most of our grant programs have a carryover balance limitation, at least in ESEA. IDEA has one as well, but the strictest of those are going to be the Title 1A requirement of 15% cap at the end of an individual year. So as the year is going on, we want to be sure we're going to be at or below that 15% carryover limitation and not be forced to spend more erratically as the year gets closer to us. So all of this is encouragement and a reminder to review your budgets, review your drawdown claims throughout the year, make sure your spending is on track and you have plans for everything so that we're not panicking and spending a little bit less responsibly and more frantically towards the end of the year. So the steps to figuring out what my carryover should be is seeing what my budget is, seeing what my planned expenditures are, what my historical expenditures are, and anything remaining should be carryover, right? We're assuming that the budgets are correct. So we got to verify that. Just, one last check, make sure nothing changed in the CFSGA, make sure nothing changed in the GRA, that our budgets are actually fixed and correct. So once this wants to catch up. There we go. So as I just said, I mean, there is a 2 CFR saying you have to keep your budgets on track. We do monitor to make sure your budgets are squared away, but I mean, above all else, you're responsible to your district as a business manager to report correctly your spending ability. Not even just within federal programs, it's for all of your funding. So a federal program shouldn't be any different. The difference is that the amount in each federal grant may change in the few months between June and September. So just keeping an eye on what those small changes are, making sure you don't miss anything. All right, I need another one, Rob. Go. So most fun part of the day, budget reconciliation. Tried to find the most exciting piece of clip art I could find on the website. This is the best I could do. Hope it is sufficient to get us sufficiently excited for making sure our budgets are correct. Lord help us. So the two parts of your current year budget are what was your most recent year allocation, and what was your carryover from the previous year. We still keep touching on carryover. Uh, Next slide, please. Your current year budget should be found in that allocation summary. You can find it in your CFSGA. You can see it in your GRA allocation history, in your activity report. It's in a bunch of different places within the GRA, but ultimately the master is going to be the CFSGA or the IDEA app, whatever grant application you're working in. If the 2 pages do not match, that's just a quick reminder that, hey, your CFSGA or IDEA app needs to be resubmitted and approved again to get the correct amount put into the GRA for you. If they don't match, it means you got a little bit of homework going on. Next slide, please. The GRA is going to follow your most recently approved application. So that just indicates that something needs to be updated. So on the carryover side, you're able to obligate funding in a given fiscal year from the beginning of the year to the end, nothing shocking. So any obligations you enter before 6/30 that are going to be accrued backwards are not going to be included in that carryover balance. So you got your GRA balance at 6/30. You've drawn down everything you possibly could during the year. At that point, all you have left is anything left you have unclaimed from the actual year's operations. So say your June payroll, if you're June payroll, since you can't claim June payroll until the end of June. So July 1st is going to be the soonest you can grab it. Then beyond that, all you have left are your summer accruals. That could be AP, that could be your payroll accruals for your certified staff. And after you've subtracted those 2 elements, you've got your carryover set in stone. I showed you in the grant activity report where you can kind of trace that out if it's nice and clean and there aren't any huge accruals. But even if there are, you have the discretion on your end to hold off on any new year drawdowns until you've gotten your previous year closed out in the GRA. So being able to identify what the total scope of your summer accruals are and then what your receivable was for the month of July or June rather, that should tell you by itself. Nice clean equation for you. Got a nice visual for those folks that prefer it. You've got your end of fiscal year for in that big thick blue line. Anything you've obligated before or on that date has to be claimed in that window before the red line. Once you got everything claimed up, everything that remaining balance there is going to be your carryover. Next slide, please. And now finally, you've got your current year allocation, your current year carryover. Now you got to combine those 2 and make sure they actually match what your books have. Ideally, your internal budgets, your grant application budgets, so what's in the CFSGA or what's in the IDEA app, and then what you've just now calculated should all be the same number. So if the CFSGA needs a little bit of work or your internal budgets need a little bit of work, bring that all up into snuff to what you've just calculated. Obviously, before you get too carried away changing everything else based on something you just calculated, double check your math, make sure you're not missing anything, you didn't miss any extra accruals. Obviously, budget changes willy-nilly are a little tiresome. So this is also more complicated if your district has a policy where any budget revisions need to go through the board. So obviously, through that process, be extremely diligent about what you're manipulating. But ultimately, remember that if your carryover or if your budgets are not matching to what's in the CFSGA, that is a monitoring finding as yeah. So it's important. Go ahead and keep going. So now we've got our current year budget squared away. We're set, we're good to go. We know that's solid. We've been drawing down for the duration of this year. Hopefully, we're doing this reconciliation process like early to mid-year just to get an idea of everything being on track. I recommend this reconciliation process probably twice a year, maybe 3 times, depending on the volume that you're drawing down, the number of people spending out of it, the number of people that are paid out of it, making sure you're not missing anything. But this is what we're doing. We're making sure that we haven't accidentally underdrawn or overdrawn in the past few months. So next slide, please. Uh, any any allowable expenditures that exist within these federal grants entitle you to a revenue receivable equal in value. So in theory, if you're running a perfect bulletproof program, your year-to-date expenditures should represent a revenue receivable, just uh, out the gate. Now, hopefully you've been receiving revenue throughout the year and you don't have your entire expenditure stack as a receivable and you actually have receipts, but you are entitled to revenue equal to your expenditures. Those should equal each other. Revenue receipted, revenue receivable should be expenditures throughout the entire year. If you have figured out that those have gotten off base, you've got some adjustments to make. Please, next slide. And last thing you want to do is look at the GRA and look at your year-to-date expenditures and say, okay, well, one plus the other is my budget. There's some extra nuance going on there. So one more little equation for you to make sure you're squared away is you're going to take your year-to-date expenditures. You know what that is as of today, or you know what that is as of a given date in the past. You can look at that as of that same date or as of today. How much money have I actually received from my federal grants from the GRA for this account? How much money do I have in transit? Meaning how many drawdown or what's the value of the drawdowns that I've had approved and paid that I haven't actually received yet? Or that could even be a request that's been submitted but hasn't been approved and paid just yet. So what's the value of stuff that's pending in the GRA? And that third section, that expenses since last drawdown claim, if I've claimed all my expenses up through the end of February, and I'm looking at this in mid-March, any expenditures I've made since the beginning of March are not going to be represented in my revenue receipts or my revenue in transit. That's just by itself. And I'm looking specifically at that section of unclaimed revenue because I'm assuming that my receipted revenue and my revenue in transit represents all the rest of it, everything else I've spent for the year. So if those 3 things don't cover what all I've done for this year, I've missed something or I've overclaimed something. This is where it becomes important that you have a tracker of some kind on your end to hold yourself accountable and make sure you're not double drawing or underdrawing, that sort of thing. In the event you have underdrawn something, dig back through your notes in the GRA detail report, see if we sent something back, some individual item was unallowable. Make sure you actually journal entry that out of your federal grants. That's occasionally an issue. You may have had a piece of travel that you were holding and weren't sure if you were going to draw it down or not, and you never did, and you never moved it out. It just helps you find those little pebbles and little breadcrumbs through your accounting system that you may have accidentally forgotten about. In the off chance that you found that something has been overdrawn, like you figured out that you drew down 8 people for a conference and then it only ended up that 4 people were registered and you had some refunds, in those cases, if we're not at the very end of the year, like we're not up against our audit, it isn't October or it isn't August, we have the flexibility to allow you to prorate your next drawdown claim for the amount. So let's say I have a $2,000 in refunds hit for purchase services, and I'm going to draw down $20,000 in salaries and benefits. On that drawdown, I would include the backup documentation for all $20,000 of salaries and benefits, show the reversal for the future services I just had refunded, and then mention in the notes, hey, here's what happened. We had a refund hit. I'm netting out purchase services against salaries and benefits. That's totally squared away. As long as we can look back at it and it's in the GRA for the record, we're totally fine with it. If this bridges the gap and you have entered into a completely new fiscal year of spending and you're looking back into a closed year of books, that gets more complicated. That's when we start talking about asking you to repay that funding. But if it's within the same fiscal year, we've got a ton of flexibility to support you in those kind of things. So Just keep an eye on what your drawdown rates are doing, making sure you're not missing anything, you're not underdrawing, overdrawing, that sort of thing. So go ahead and next slide. So at this point, we're certain that the GRA is caught up, or we at least know what part of the GRA is going to be useful. We know what our budgets are. So all we have to deal with left is what our remaining expenditures are for the current year, and that would inform what our carryover is and therefore our next year's budget. So next slide. So um, now all we have to deal with for the remainder of the year is what we've planned, like I just said. You've got your encumbrances, you've got your planned budgets that are unspent for your schools if you're allocating funding to your school districts. You've got your equitable services spending. You've got your supply budgets. Maybe you have an encumbrance in there for some summer school spending. Probably worth your time to touch base with your program staff and communicate with them and see, hey, are these contracts coming in under budget? Are they coming in over budget? We're going to adjust these encumbrances to encapsulate what all we're planning on obligating and not just whatever our estimate was at the beginning of the year. Now, for a lot of you guys are old heads, you're experienced. This is a 101, but it's worth hearing the reminder that staying on top of this gets you a better result for planning out your carryover for the next fiscal year. So, and what the end goal of this process is you're going to be reconciling what those planned encumbrances are, what those planned expending is, so that even earlier in the fiscal year, you can see what your carryover is going to be. If I have everything squared away and everything's encumbered that it needs to be, and I've got set asides for all my supply budgets and everything I put away properly, I can extrapolate my carryover months in advance before I even know my allocation. So, next slide, please. Okay. At that point, like I just said, whatever that remaining portion of my last year of my current year's budget, I can almost completely and safely assume that that last section is going to be my carryover. I'm going to move into this next year confidently knowing that that's what I can put into my IDEA app or into my CFSGA and plan off of and not be constantly monkeying with that number to get it to perfectly match what my closeout books are. Obviously, there's inevitably going to be some degree of monkeying when the audit's closing out and you're finding some AP invoice that was buried in somebody's desk or was half eaten by somebody's pet raccoon or something along those lines. Audits never go cleanly, but for the most part, you've got a clean baseline. So that makes that a little simpler. And one more reminder that your final applications are the ones that need to have your perfectly correct carryover in it. Your preliminary applications, the one you submit by 6:30 for us and the one you submit by 6:15 for Lisa, those don't need to have a perfect carryover in it. We understand that things are going to happen. Just give it your best estimate based on what you have. In November, you'll have finished your audit, and hopefully you will know perfectly what your carryover ended up being to the cent. So you're not held accountable for the early one, just the late one. Well, next slide, please. So some tips and tricks. We've changed the color of the slide to remind you that this is no longer statutory. This is no longer the stuff you're held accountable for. This is just best practices, some tips we've picked up. So given that you're managing 2 years of federal grants at the same time at the end of the fiscal year and the beginning of the next, if you're in like mid-July, you're having a bit of a mess sorting out 2 years of books. Just be careful about what's going into each year's books. As a reminder, nothing you're obligating after July or after June 30 should go back into those previous year's books. The only thing going back into those books are going to be prior obligations like signed contracts for payroll or a signed contract for any purchase services, any outstanding AP invoices. It can't be something you're newly agreeing to or newly engaging with. Next slide, please. So that should mean under clean circumstances, absent any raccoon eating AP invoices activities, you should know what your carryover is going to be as of that date, and you can draw down against it. When you're drawing down those obligations that happened before 6:30, I recommend that you label your drawdown requests in the notes saying, hey, this is a closeout request for the previous fiscal year. That way, when you or your successor look back into that GRA detail report, you can see exactly which requests went to which fiscal year, even during the transition period. I also like to draw or to space out my drawdown claims if I'm claiming for multiple fiscal years at once. Um, like heaven forbid something's going on in the month of July, and I'm also closing out July accruals. In August, I have a prior year salary accrual to claim and some summer school expenses to claim. So I'm going to claim the prior year accruals first. I'm going to label it as much, and I'm going to submit that. I'm going to wait a week or two, and then I'm going to submit the summer school expenses separately. That way, each of those payments arrive in my books as different line items. They're different checks that get sent to my district, and I can see in my ledger where exactly everything arrived. That's not required. The spacing between drawdowns these days is only 7 days, not 15. So you could do it in independent weeks if you'd like. You can also manipulate it on your end so that your AP or your AR clerk is just separating those lines out as best she can or as best he can on your end. But just to keep it mechanically separated and showing as separate in the GRA reports, I like to do it nice and separated out. But also, as a reminder, the GRA is relatively simple in terms of what order the grants are paid out in. It is first in and first out, meaning that if you have only a certain amount of GRA balance in there, and that GRA balance is only enough to cover your summer accruals and not any new spending, even though you have the balance available in the GRA in early August, if you claim it against July expenses from the new year, you may leave yourself high and dry with an open receivable when it comes to claim August accruals. So make sure you protect that balance if needed as you get into those transition months, and maybe wait until your new allocation shows up to start drawing brand new year expenditures. So I got my closing thoughts. Just one more reminder that keeping your carryover balance in mind as you move through the year keeps you informed of what the spending rates are going to be, making sure you're not panicking at the last minute to try and hit that 15% carryover limit. That's the only one we have trouble waiving on our end. We only have so much flexibility. The other ones we have a bit more leverage to help you out with, but that one is essential. So keep on top of it. Don't let it become a panic at the very end of the year. Develop systems on your end that helps you track your drawdowns. Make sure you're drawing down everything. You're not missing anything. You're catching when you're reversing things out of an account and need to credit your next drawdown. And then one last reminder that the carryover entered into your preliminary applications don't need to be perfect. It's just the final ones that we're holding you accountable for. And then last but not least, just thank you guys for all of your hard work. The GRA has been fun for all of us, and we're still in the process of developing our GRA manual to help you guys out even further to help this all be squared away. So thank you, folks.
Thanks, Austin. Appreciate your help on that. Good review. So we did want to add in our contacts. These are changing as we've had quite a few people who are were at the department, now working back in the education sector directly for LEAs. So we've got some movement on this, but did want to put these folks out so you have that. These contacts are updated fairly quickly within our website. But so here we have the special education, and then next we'll have our federal programs again. Maria here at the top is the director, but you'll also see her on this next page as well, working as her EL program coordinator. So thank you so much for your time, folks. We know that your time is very valuable and very limited. We want this to be as helpful for you as possible. And so if you have any ideas of things you'd like us to go over as we're going forward, please don't hesitate to reach out to us. Give us a call, shoot us an email. We want to make sure that this community is helping serve you and that you are getting the most out of it. So thank you very much for your time, folks. Have a wonderful August 21st, and we will catch you next month. Thank you all so much. Stay super.